Hey everyone, and welcome. Today, we are going to build an investment blueprint for 2026. If you've ever felt like your money should be doing more for you than just sitting in a bank account, you are definitely in the right place. We're going to talk about how to really put it to work.
So let me just ask you something right off the bat. Is your savings account actually shrinking? I know, it sounds a little weird, right? But if your money is just sitting there, it's very likely losing its buying power every single day. And let me show you exactly what I mean.
So on this slide, you can see two totally different stories playing out. Over on the left, you've got cash in savings, and it's slowly getting eaten away by inflation. Its value is just decreasing over time. But on the right, that's money that's been invested. It has the potential to grow, to not just keep up with inflation, but to build real, actual wealth. And that right there, that is the core reason we're talking today. Okay, so that perfectly tees up our first big idea: why your money needs a job. And I mean a job that goes way beyond just sitting in a savings account. It's all about turning your cash from a passive thing into an active asset. So how exactly does your money earn its keep when you invest it? Well, it's really two main ways. First, pretty simple: stock price growth. The value of the shares you own goes up. And second, something called dividends. You can think of these as a little thank you bonus from the company. They share a slice of their profits directly with you, just for being a part owner. It's a really powerful one-two punch for growing your money. All right, so hopefully you're on board with putting your money to work. The big question is, where? Where do you even start? So let's look at where to invest in 2026, and we're going to focus specifically on industries that look like they're set up for some major growth. As we look towards 2026, there are really 5 key areas that are just screaming growth. You've got artificial intelligence, of course, and right alongside it, the semiconductors and chips that are basically the brains of AI. Then there's fintech, which is completely changing how we handle money. Gaming and entertainment, a massive force. And the huge undeniable shift towards renewable energy. And here's the cool part: these aren't just isolated trends. They're all connected, all feeding into each other to drive what's coming next. Okay, so let's zoom in a little. We've got the big picture industries, but now let's look at the actual companies, the key players that are out there building this future. Let's kick things off with a name you've probably heard everywhere lately: NVIDIA. They are at the absolute heart of the AI explosion. But what is it they actually do that makes them so important? Let's break it down. So NVIDIA basically makes these incredibly powerful computer chips. They're called GPUs, and they are the engine behind everything from cutting-edge AI to the video games you love to massive data centers. And that's exactly why they're such a strong pick. They're totally dominant in making this critical hardware, and they just do not stop innovating. It puts them right at the center of this whole tech revolution. All right, so if NVIDIA is kind of like the brain of the operation, our next company, well, they're the ones building the entire foundation that everything else stands on. Let's talk about Taiwan Semiconductor, or as most people call it, TSMC. Okay, here's the deal with TSMC. They don't really design their own chips. Instead, they're the world's master builders. They manufacture the most advanced chips for almost everybody else. With pretty much every major tech company relying on them, their incredible technology and the sheer demand for what they do puts them in this unbelievably powerful, almost indispensable position in the global supply chain. Okay, let's switch gears from hardware to how we actually handle our money. In the financial technology space, or fintech, we've got SoFi Technologies, a company that is seriously shaking up the old-school banking world. You can think of SoFi as a sort of Swiss Army knife for your financial life, all packed into one app on your phone. They've got online banking, personal loans, investing services, the whole shebang. And their real strength? They've totally nailed what a younger generation wants, which is to manage their entire financial life from their phone. And that has just fueled some incredible customer growth. Okay, so we've looked at some really exciting companies, right? But just picking one or two, well, that can be pretty risky. And that's why you need a strategy. This brings us to the Smart Investor's Playbook and how to build a portfolio that's resilient, one that can handle the inevitable ups and downs. And the absolute #1 rule, the most important concept in this playbook, is diversification. It really just boils down to that timeless advice you've heard a million times. Don't put all your eggs in one basket. By spreading your investments across different companies and even different industries, you lower your overall risk if one area has a tough time. So this chart here gives you a visual of what that could actually look like. See? You're not going all in on AI. You're spreading your bets, allocating a piece to each of those key growth sectors we talked about. This way, if one sector has a slow year, the others can help balance things out.
That is how you build something that's designed not just to grow, but also to protect your money when things get a little choppy.
Now, I know what you might be thinking. Building a portfolio like that sounds like a lot of work, right? Well, there's a fantastic shortcut, especially for beginners. Things called index funds and ETFs let you buy a tiny piece of hundreds or even thousands of companies all at once. It's like instant diversification in a can, making it one of the easiest ways to get started and lower your risk right out of the gate.
And hey, whether you're buying a single stock or a whole fund, it's always smart to do a quick health check. You want to ask a few simple questions. Are their sales actually going up? That's revenue growth. Are they making a real profit on what they sell? That's their profit margin. Do they have a ton of debt hanging over their heads? And finally, how do they really measure up to the competition? Just asking these few questions can tell you so much about a company's health.
All right, we're heading into the final stretch. And honestly, this might be the most important part of all, your mindset. This is all about mastering the long game and creating a strategy for sustainable growth over time.
The actual strategy is surprisingly simple. The hard part? It's the discipline. First, just invest regularly. Even small amounts add up over time. Second, reinvest any dividends you get to let your money really compound. Third, be patient. The market will have bad days and bad weeks. That's a guarantee. And number 4, and this is the big one, you have got to take emotion out of it. Fear and greed, they are the ultimate portfolio killers, period.
And, this quote really nails the whole philosophy here. The goal isn't to get whiplash trying to react to every bit of news. The goal is to trust in the long-term vision of the strong companies and industries you've chosen. That is the real secret to success.
So as we're looking ahead to 2026, I want you to remember this. The future isn't just something that happens. It's being built right now, piece by piece, by the very companies we've talked about. So the real question isn't just who you'll invest in, it's what piece of that future do you want to own for yourself?